and welcome back to the Rex News channel where we discuss issues and trends facing the oil and gas industry. If you are new to the channel, kindly like, subscribe, and share to stay updated with the current trends. We have with us today Pranav Kant, a seasoned expert in the oil and gas industry. Welcome back, sir. How is your Saturday so far?
Thanks. It's good to be back again, and Saturday is as interesting as ever, and looking forward to this chat.
Good to know, sir. So, starting off with my first question for you today. After 2 weeks of weakness, crude prices appear to have recovered from last week. Are fears of a recession subsiding?
Yes and no. Fears of recession is one key data point which has been behind the weakening of the crude oil prices, and no new data is there to suggest that the recession has changed its course. So that stays where it was. It has not worsened either, but it has remained stable. All the data from all the key markets worldwide, which is it remains at an elevated level. Looking forward onto the recession side, there are indications in terms of the data that it might be peaking in terms of the inflation. So if the inflation is close to peaking, so which means recession would not worsen further. So let's wait and watch, because that's the stance we take on the recession. The bigger the data point which the crude oil market seem to be looking at is the upcoming sanctions from the December on the Russian crude when it really hits. Now, that brings us to the question of rerouting the Russian crude, because we need to remember that currently under various caveats and various clauses, Europe was still buying and continues to buy the Russian crude. So what it means that from after December, all those clauses would be withdrawn, and technically speaking, Europe would not be able to buy Russian. So that fear is largely playing onto the market in terms of the recent minor increase in the prices, which we need to take a call as to how the rerouting of the supply is likely to take place. And therein comes the question of the big question, which is concerning the oil markets, is where would the additional tanker fleet requirement comes from? Because currently it indicates that the tankers required to ship crude from Russia to the rest of the market are currently not sufficient. So that part is really working onto the current prices. But our view is that it's a little early to take a final call on that. Yes, tanker shortage is a key issue. It's a very valid issue. But how it's likely to play out, we'll need to wait and watch. So currently, it is less of a recession driven than for the sanctions effect and the tanker effects driven. But in the near term, which is in the immediate term, which is for the next week, I believe the prices could inch slowly upward.
Okay, so we shall see what happens next week.
Yeah.
So, moving forward to my next question, bitumen prices seem to get stronger while furnace oil prices are dropping. Do you see any reason for this anomaly?
Yes, this is interesting, and let's handle fuel oil first, because fuel oil is more directly linked to the crude oil prices, and with the recent decline in the crude oil prices, fuel oil naturally followed suit, and it was reflected in that. Second part, which was working onto the fuel oil markets, is with the recessionary fear, the shipping rates have been coming down in terms of the actual physical movement of the goods. So less ship movement, and fuel oil, let's not forget, is the key fuel for the shipping lanes. So that is what is kind of behind the fuel oil softening along with the crude oil. So the shipping lines are not as busy as it was expected to be, and the crude oil has been declining. So that kind of has been the key key reason for the fuel oil. While when we come to the bitumen side of the market, bitumen is very demand centric, and after the monsoons or the rains getting over, the demands is on the uptick. And that is why across the markets, the key benchmarks for the bitumen, we have seen a little bit of an uptick in the bitumen prices. And also because with the onset of the winters from the December and onwards and January, which is the lean season, the traders want to stock up for the current demand uptake and feed into the demand. So that is behind the current bitumen price uptake. We expect the bitumen price uptake to remain for another 3 to 4 weeks before we head into kind of plateauing little bit onto the bitumen side. So that's where we are.
Okay, so let's see what happens next. As always,
Yes,
you have shared some really great insights with us today. I'd like to thank you for being here with us. It was a pleasure talking to you.
it was indeed a pleasure. Thanks.
Thank you all for watching. Kindly continue to show your support by liking and subscribing to the channel. Stay tuned for more.